Kotak Mahindra Bank reported a disappointing set of numbers. Here's the management highlighting the reasons behind that.
The securities company at 46 crores. Overall at the group level, the advances at 71,000 crores roughly, which is about a 6% growth on a year-on-year basis. What we have done this time around is been that, as we talked last quarter, very consciously taken a slow growth or actually a negative growth in areas like commercial vehicle construction equipment. If you look at that, that piece of construction equipment, commercial vehicle, has had a negative growth of 26%, and where we found the good India, we have actually grown assets. And if you take that take the CVCs out, the growth has been at about 10% annualized. NIMs at the overall consolidated level at 4.9%, with the return on assets at 2%. NPA numbers at the group level, gross at about 1.68 and net at about 0.9. At the standalone level, this quarter, as I said, 340 crores, which is compared to 362 crores same period last year. We ended December with an overall branch network of 533 branches, which is about 125 set up during the calendar year 2013. This at the bank level, advances 53,000 crores, which is again a 6% growth year on year. And the big piece of commercial vehicle construction equipment which I talked about is within the bank. So if I take that out, the growth of advances at the bank standalone 12%. And interestingly, for this quarter, the bank overall advances growth is 5%, and if I take CVCs out, is at 8%. So broadly, what we've been doing is, as we talked last quarter, the good India and the challenging India, we've grown, identified areas of good India where we've continued to grow. The consumer bank, for example, has had a 19% growth year on year. The agricultural piece, the division of agriculture, doing a 23% growth year on year. So pockets of the advances continuing to have big growth. At the bank standalone level, NPAs gross at 2.01% and the net at 1.1%. Capital adequacy continues to be pretty strong. If I include the third quarter profits, we end up with a Tier 1 capital of 17.9% and an overall capital base of 19.2%. This quarter, we have also seen the deposit space growing pretty decently. We have had a savings growth year on year of 38%. CASA at the end of the period at just short of 30%. And we've seen the deposits, which are the more retail type of deposits, which are the ones below 1 crore, that has grown 31% year on year. And as always, we've continued to have our restructured numbers at the bare minimum. 42 crores is all we have, which is 0.08% of the overall advances. So that's been the broad highlights of this quarter.
So, good afternoon, this is Anirudh here from ET now. So actually, just to start with a question from one of our viewers, he's an investor from Delhi, his name is Arman Chaudhary. He wants to find out what are the growth prospects you're looking at going forward, and how do you plan to tackle the NPA issues which have cropped up in this year going forward in 2014?
You know, as Jaimin mentioned, the growth really is in two parts. Yeah, parts which we are very comfortable with, we have been continuing to grow, and parts where we are not comfortable or less comfortable, we've been very cautious really. Yeah, so what you see is ultimately a summary or a net figure of the two really. So I think that strategy will continue. There are CEC, we still seeing some level of stress, though at a lower level really. Consumer is still looking pretty good really, so I think you will continue to see some amount of growth over there really. Mid-market is still subdued really, corporate is okay really. So various subparts are growing at various stages. So what you see ultimately is a summation of all of these. And NPAs, I think most of the NPAs now, what we've seen are really in really. I think it looks far better going forward now really.
And sir, in your CV,
but mind you, that is because we've also slowed down a lot of businesses really. And that's why fresh flow is that much more subdued.
In the CV portfolio, you've seen a negative growth of 26% like you mentioned. If you can just give me...
It's not seen, we've actually consciously slowed it down. Really. Yeah, we've slowed it down.
If you can give a sense of the asset quality picture as far as this particular portfolio is concerned.
So obviously it is not good really. Well, we've not disclosed individual categories, but it's obviously not good. Yeah, it was not good, and we saw that coming about 1.5 years back. It has been steadily coming down, but I think we are seeing some signs of stabilization there now really.
When could we see a turnaround in this particular?
Well, you have to tell me when the overall market will improve. So unless that happens, it's tough to say. Because ultimately CV is, sort of bellwether for the overall economy. As the overall economy, starts growing, you will see CV pick up really.
So you're still going to continue to remain really cautious?
I think still cautious, but as I said, there's some signs of it now stabilizing. Yeah, still not optimistic about it, but stabilization definitely, yes.
Do you think the asset quality levels have stabilized?
Yes, yes. Incremental flow is not as much as what we used to see in the past really, yeah. But remember, that's also because we've slowed down really, yeah. So there is not too much of asset growth which is there really.
So could I get a sense of your recoveries and this month's slippages this quarter?
Well, if you look at overall gross NPAs, as Jaimin mentioned, we are at about 2.01%. This is marginally higher than what it was last quarter really.
This quarter, if you look at the gross number on the NPA has grown by almost 70 crores.
Alright, so the recoveries?
When I say 70, it is net of some recoveries which are not, but the recovery is not large.
So if you could also give us a sense of your bond portfolio, have you all seen any gains in the quarter, and going forward, what's the outlook on yields and therefore your portfolio looking like?
Let me first explain now in quarter 2 we had talked about the fact that while RBI had permitted a set of securities to be transferred to HTM, we had opted not to do that, and we had talked about the fact that as of September we had 263 crores of an MTM loss. We have taken 1/3 of that in that quarter. Now as we speak, we've taken part of that hit in this quarter, and if I compare this quarter 3 for FY14 versus the same quarter last year, my treasury delta negative is close to 90 to 100 crores for this quarter, which includes the unamortized amount which were taken in this quarter. But as we speak, as of 31st December, that part of unamortized number which was not taken, which would effectively mean I would take in the current quarter, is about 65 crores. But the good thing is, as of today, since there's been a rally, that 65 crores of negative is actually turned out to be a small positive number.
And going forward,
So it's really moving with how we're seeing yields move, yeah. And then I think one of the point which Jaimin touched upon really is, see, if you look at us in comparison to most others, our percentage in HTM has been pretty low. Yeah, we've been about 11% of our total bond portfolio is HTM.
Alright, well, that's the Kotak Mahindra Bank management talking about the earnings this time around, asset quality pressures seeping